the sell-off, at least initially, in Chinese stocks as a result of this new wrinkle in China's ever-changing regulation of internet companies, namely this time online gaming. So let's look at NTES. Irusha, let's just get your thoughts on the action of the Chinese names, and have you steered clear of them? Have you been watching them closely? Have you had any chances to make money in them?
So yeah, for the most part, I've steered clear of the Chinese names. So I cover more retail stocks for William O'Neill.
Mm-hmm.
We added PDD, so you can pull up PDD.
Here's Pinduoduo. Yep.
This one was breaking out on earnings out of that big couple with the handle. Yeah, there you go. So we added it there, and it's been working really well. And so this is like one of the few only stocks that I've gotten that really worked well, because it's been very, very tricky, especially in China. A month ago, or like 6 weeks, a couple of months ago, what I was saying is like there are only like a handful of stocks in China that are acting well. Most of them are terrible. If you pull up like the FXI's been struggling for the longest time, but the handful of stocks that I was just saying within China that were acting well were PDD, NetEase, Li Auto, and maybe EDU. It was like there are like 4 stocks that were hanging in there. Well, we lost NetEase today, and NetEase started to break the 50 over the last few weeks.
Right,
Li Auto has been pulling back quite a bit.
Sure has.
It's still hanging in there, still working on a base here. So that one might still have a chance. And then EDU, I think EDU was getting hit today a little bit too, but EDU's been doing pretty well still. So that one's hanging in there. But it is breaking the 50 a little bit more. So this might need to build a new base here. But besides that, there aren't that many. There aren't too many other Chinese stocks that are doing well at all. So it's definitely an area that you're generally better off probably avoiding right now, because the odds are TAL's, yeah. So the consumer education stocks in general have been doing well, and so TAL and EDU, but you also have like STRI, LRN, which is a STRI that they had a great earnings reaction. LOPE, right? Grand Canyon, so LOPE. So this group here is doing really well. So maybe they're anticipating more job layoffs and people are going back to school. But in general for China, it's hard to find a stock there, and I think a lot of institutions in general are just avoiding China. Whenever I talk to institutional clients, they don't even want to hear Chinese names.
Wow.
Which kind of the contrarian part kind of said, "Oh, China's probably going to do really well, right? If no one wants to invest in it, and only a handful have been able to do it. Most of them have they continue to avoid it. They don't trust it, and of course now China has a lot of headwinds." Especially, and the biggest one that a lot of money is starting to move out of it, right? And either coming back to the US or going to India or Vietnam or some other areas.
Yeah, I would just like to add is like the regulatory risk is so strong on so many of these things. Like that's what's hitting, the school stocks and some of these e-commerce plays today. Is just that, oh, will they start cracking down again? I mean, that's the risk. I don't think the EVs have the same risk, but the price wars are just crazy there. It is so hard. And Li Auto, which completely escaped things early on, it's facing more competition. I'm not saying terrible. Oh, no, it's doing fine, but it's just a fierce business. And so it's just that's an area where I think the government isn't going to crack down, but it's so competitive, it doesn't matter, is basically the thing.